We're live, time to work. Start off with a passage or two here. New American Bible, Revised Edition, page 23. Sorry, numbers down here. Okay, 22, numbers at the bottom here. All right, page 22, learning about your Bible. The Bible is a series of books written under the inspiration of the Holy Spirit between 1200 BC and around 100 AD. They were produced in a number of different forms of literature, historical accounts, poetry, letters, parables, sayings, etc. They were written in various languages, Hebrew, Aramaic, and Greek. They present different ideas about who God is and what God wants of us. They present different ideas about who God is and what God wants of us. Yet these books, which we call the sacred scripture, form a single message that we call the Word of God. The letter to the Hebrews tells us that this word is so powerful that it is like a two-edged sword that can separate bone from sinew. How was this collection put together? Who wrote this? Who wrote its individual sections? Why, when, etc.? The authors of the Pentateuch. The oldest portions of the Bible are cultic hymns which celebrate momentous events in Israel's history. For example, Exodus 15, which celebrates Israel's deliverance at the Red Sea. These hymns were probably sung at shrines to commemorate how God acted in Israel's history and to instruct the next generation about who their God was. These hymns, however, were not enough once the Israelites conquered the land flowing with milk and honey. That's what I thought was weird. I thought it kind of stood out. If you have a land flowing with milk and honey, yet you still don't have enough. All right, anyway. The nation needed an explanation as to how they arrived at this point. Thus, a first school of authors wrote the story of God and Israel from the creation of the world up to the present day, circa 950 BC. These authors were called Yahwists, for they tended to use the name Yahweh whenever they referred to God. Their stories are highly anthropomorphic and speak of the importance of Judah and Jerusalem and the monarchy. When they wrote of the primitive beginnings of the world, they borrowed ideas from other cultures to express their beliefs. For example, God shaping Adam out of mud or clay, the flood, etc. When they spoke of the patriarchal period, they depended upon stories passed down at various shrines scattered throughout the land, which would explain why some stories are doublets, once attributed to one patriarch and later to another. For more recent events, they depended upon the memory of the people and their storytellers, whatever chronicles existed at that time. A century later, in 850 BC, another school of writers arose in the northern kingdom of Israel, for by now the 10 northern tribes had broken away from the 2 southern tribes. These were called the Elohists, for they used the word Elohim when they spoke about God. They had a more spiritualized view of God. They centered their narratives on the exploits of the northern heroes, the prophets, for example, Elijah or Elisha. Some of their stories repeat previously told Yahwist stories. The Elohist version was either placed side by side with the older Yahwist version, or they were intertwined. This process was repeated again some 300 years later, in 550 BC, when the priestly school arose while the Jews lived in exile in Babylon. They emphasized the importance of ritual and law in order to preserve Jewish identity for people living in exile. Finally, there was a fourth source of the Pentateuch, the Deuteronomists. They take their name from the book of Deuteronomy, which had been found in the temple around 662 BC. Their writings speak of how things should have happened in Israel's history. For example, wiping out all pagans from the land so that Israel would no longer be tempted by them to turn against Yahweh. Yeah, right then and there, no, we're not trying to wipe anybody out. I already have it wrong. So, no, not that. That belief system is wrong. We're not wiping anybody out. You need to learn how to cooperate, how to pursue diplomatic resolution rather than just simply trying to kill people and expecting that to be the answer to your solutions. That is stupid as hell and not what we do. So yeah, even God realizes that things need to be updated. So like there's a necessity for change. Yet somehow people their vision is clouded. All right. The Deuteronomists are also the Deuteronomists often also edited materials written before their times, often reshaping the message to better reflect their point of view. Again, distorting information to push a certain narrative. So convoluting the information. Good. All right. Sometime after the exile in Babylon in 587 through 539 BC, the books that we call the Pentateuch, the first 5 books of the Bible, were put together in the shape we now find them. They were called the Torah, a word that can also refer to the law of Israel, and they became the core of what Israel believed about God and his relationship with the people of Israel. Yep, and you guys were still evolving, still learning, and had a lot of refinement to undergo. I'm going to pick up on the prophets. Chapter 14 through 17 review. Just to mark my tasks. All right, let's go ahead and do this video review. There you go. Y'all can see what I'm saying. Turn this on, a little extra stimulation. Checking this image. I'm just going to do that. Background. When I have time, still going to focus on it.
So our first question here says, Robles.
Long video, we need to take a little break.
Corporation was organized on January 1st, 20.
starving. If it was like a starving situation, yeah, food. We can't function without food. Right now, we're not starving, so we don't need to reward ourselves or treat ourselves with extra food that we don't absolutely need. So,
16. During its first year, the corporation issued 2,000 shares of $50 par value preferred stock and 100,000 shares of $10 par value common stock. Then at December 31st of each of the following years, the company declared the following cash dividends. So in 2016, they declared $5,000 of dividends. 2017, 12,000, and then in 2018 they declared $28,000 worth of cash dividends. So we need to show the allocation of dividends to each class of stock, so preferred versus common, assuming that the preferred stock dividend is 7% and cumulative. So we first need to calculate to figure out how much preferred shareholders are supposed to be getting each year. And there's going to be a calculation here. So the annual preferred dividend will be your number of preferred
form a calculation
times the par value. Remember, the annual preferred dividend will be your number of preferred shares times the par value for preferred stock times the percentage that they give you. So if we take a look at the information given to
I can only use one page for my managerial accounting quizzes, so don't want to use that page. This one specifically for chapter 20 or whatever is going to be on that quiz. This one is separate, so go ahead. Delineate it by putting it on a different page.
us. We have 2,000 shares of preferred stock. Its par value is $50. And our percentage is 7%. So if we plug all of that information into our formula, we get 2,000 times 50 times 0.07, which ends up giving us an annual preferred dividend of $7,000. So what that's saying is that every single year, your preferred shareholders should get $7,000 of dividends. So remember that as we move on into allocating our dividends now. So we'll start with 2016. Down along the bottom of this chart, you'll see the total amount of dividends for each year. In 2016, we declared $5,000 worth of dividends. That's a bit of a problem, right? Because your preferred shareholders are supposed to get $7,000. So, preferred shareholders will get all $5,000 that we were supposed to pay out in 2016. They can't magically get their $7,000 even if we aren't going to pay it out, right? So they get as much as they can of that $7,000. So if $5,000 are going to preferred, there's nothing left over for common. So common shareholders will only get whatever left over at the end. Now, that means that we owe $2,000 to preferred shareholders, right? Because they're supposed to get $7,000 every year. We only paid them $5,000 this year. So we owe them that $2,000 difference. So since it's cumulative, that means that that $2,000 is going to have to be paid to them in the future. If we were told that this is 7% and non-cumulative, that means that if preferred shareholders miss out on $2,000 of dividends, they miss out on that money forever. But here, they're lucky it's cumulative. They get this money later on. So we take a look at 2017. In 2017, we declared a total of $12,000. So now we need to split up this $12,000 between preferred and common. Well, preferred are supposed to get $7,000 every year. And then they're also supposed to get that $2,000 that we owed them from the previous year. So we can pay them here $9,000. We can pay them their $7,000 that they're supposed to get for 2017, plus the $2,000 that we owed them from previous years. So preferred shareholders can get a total of $9,000 of dividends this year. So if we're paying out $9,000 to our preferred shareholders, that means that there's only $3,000 left over for our common shareholders. So now we move on to 2018. In 2018, we declared a total of $28,000 of dividends. So we need to split up that $28,000 between preferred and common shareholders. Well, preferred are supposed to get $7,000 every year, right? That was our annual preferred dividend that we calculated on the last slide. Well, here they just get their $7,000. They weren't owed anything extra, right? We didn't owe them anything from previous years anymore. And so we just pay them the $7,000 that's decided by taking those number of shares times the par value times our percentage. Right? So preferred gets their $7,000. Common gets whatever is left over. So there's a total of $28,000. $7,000 of it goes to preferred, $21,000 goes to common. Now remember, when you're looking at these numbers, in this problem, there were 2,000 shares of preferred stock, and there were 100,000 shares of common stock. So even though more money is going to common stock here in 2018, there's less per share, right? Because there's so many more common shares out there than there are preferred. So being a preferred shareholder, you still get a better return per share. So that is going to be how we figure out the allocation of cash dividends between preferred and common stockholders. Remember that preferred gets their money first. Then if anything is left over, common just gets the rest. Now we can move on to question number 2. So this says, on January 1st, Klosterman Company issued $500,000, 10% 10-year bonds at 102. Interest is payable annually on January 1st, and we need to prepare some journal entries. We need to prepare the entries to record the issuance of the bonds, the accrual of interest, the payment of interest, and then the payment of the bonds at maturity. So we have all of the important information over there on the left. So here on January 1st, 2019, Klosterman Company is issuing these bonds, right? So when a company is issuing bonds, what are they getting in return? Well, they're getting cash, right? A company is going to issue bonds to help them finance a project. It's just a way for them to get an influx of cash. So we'll debit our cash here. And we'll credit bonds payable, because if people are giving us money, we're eventually going to have to pay them back. So we have a liability account here for bonds payable. But you'll notice there's a gap there on the screen right now between cash and bonds payable. That's because of that at 102. What that's saying, whenever you issue bonds at 102 or anything above 100, that means that you're issuing them at a premium. So we have to credit the premium on bonds payable. If we were issuing them at 98 or at 94, right, anything below 100, we would be issuing them at a discount. And that's when we would debit discount on bonds payable. So now we can figure out these numbers here. Bonds payable itself will always be the face value of the bond. So that's the 500,000 here in this case. Our premium is 10,000. How do we find that? Well, we issued it at 102. What that's saying is that we're issuing these bonds at 102% of face value. So your premium is that 2%, that part that you are over 100. So if we take 500,000 and multiply it by 0.02, you'll end up with 10,000. So that's our premium on bonds payable. Now cash, there's a few different ways that we can find cash, right? The simplest way, debits and credits have to equal. So we know our two credits are 500,000 and 10,000, so cash must be the sum of those. Another way that we can find cash is going back to that 102. So if we are issuing bonds at 102, that's 102% of face value. So if you take your face value, your $500,000, and multiply it by 102% or 1.02, you'll end up with 510. We can find that cash amount. So that's our journal entry for the issuance of the bond. Now for the accrual of interest on December 31st, 2019. So you'll notice that we were given 10%. This is when that 10% will come into play. That's an interest rate on these bonds, right? So we are the one that will have to eventually pay the interest on these bonds. So we deal with accounts like interest expense and interest payable, right? So we debit interest expense and we credit interest payable. You'll notice again, there's a space between those two accounts. That's because we also need to amortize our premium. It's a fancy word for just decreasing the balance in that account, right? So you'll probably see stuff like amortization of the premium in your textbook or on your homework assignments. Just know that that means that you have to decrease the amount in your premium or your discount account. So there's a process here. We're first going to be calculating our interest. So that's your principal times your rate times your time. So our principal is 500,000 times our interest rate of 10% times 1, because it's been 1 full year. So you find that your interest is 50,000. Well, we sort of have a 50-50 shot now of putting it in the right spot, right? We could put it up in interest expense, or we could put it in interest payable. Here's how we can remember this. When people gave you this money back on January 1st, they were told that they would get 10% interest. right? So you're contractually obligated to pay them that amount. So your 50,000, the calculated amount for your interest goes into your interest payable, because that's the amount that you're going to have to pay them later on. Now, the next piece is your premium on bonds payable. This is when we amortize our premium. So our premium on bonds payable was $10,000, right? It's a 10-year bond. So if we take 10,000 divided by our 10 years, we get 1,000. So we will debit our premium on bonds payable for 1,000. So now our interest expense is 49,000. We get that by just taking our payable and subtracting our premium. So now we can move on to January 1st of 2020. This is when we are paying the interest to these people, right? We're told interest is payable annually on January 1st. So we have to decrease what's in our interest payable, and we're using cash to pay them. Now, how do we figure out the number here? Well, we look at the entry that we made back on December 31st. The amount for our interest payable was 50,000. So that's the amount that we will use in this entry when our interest is being paid. Now, the payment of the bonds at maturity. So 10 years have passed since we issued these bonds, and so now we need to pay everyone back. So if we pay everyone back, we no longer owe them money, right? So we want to debit our payable to make that liability account decrease. And how are we going to pay them? We're going to use cash, right? So we debit bonds payable and we credit cash. And that's just for the face value of these bonds. So those are your journal entries around the issuance of bonds, the accrual and payment of interest, and then the payment of the bonds at maturity. Now, in this next question, we're told that the balance sheet for Miley Consulting reports the following information on July 1st. So on our balance sheet, we had bonds payable of $1 million. We still had $60,000 of a discount on our books. And then you'll see that 940. That 940 is called the carrying value. It's sort of like the book value of your bond. So on our books, that bond is worth $940,000, which we get by taking our bonds payable and subtracting out that discount. Then it says Miley decides to redeem these bonds at 101 after paying annual interest. Prepare the journal entry to record the redemption on July 1st, 2020. So we have our journal entry here. If the bonds are being redeemed, that means that we have to pay this money out right now. And if we pay the money out, we get the bonds payable off our books, and we're going to have to use cash, right? So we want to debit bonds payable and credit cash. But there's going to be a few other accounts in between there that we're going to have to deal with. Another piece of information that we're told is that we had a discount on our bonds payable still on our books. Well, if these bonds are being redeemed, we need to get that discount off of our books. So a discount has a normal balance of a debit. So to get that balance off of our books, we credit discount on bonds payable. So we still have another account. You'll notice there's still a gap between bonds payable and our discount. But let's fill in the numbers that we know so far. Bonds payable, that was the 1 million. Discount, that was the 60,000. Now for cash, there's going to need to be a calculation. So for cash, what we're going to do here is we're going to take the face value of our bond and multiply it by 1.01. And that's because Miley is redeeming these bonds at 101. So that's at 101% of face value. So our face value, that's the 1 million. We multiply 1 million times 1.01 or 101%. And we get 1,010,000. So we put that in there for cash. So now the last account here is either going to be a gain or a loss on this bond redemption. Well, to figure that out, what we do is we compare our cash amount to the carrying value that we were talking about earlier. So our carrying value is $940,000. That's what it's worth to us on our books. We are paying out $1,010,000. So since our cash is greater than our carrying value, we're going to have a loss on the bond redemption. And this loss is $70,000. That's your cash amount minus $940,000. Another way that you can figure this out, we needed to add more over to the debit side of this entry, right? If we need to add more to the debit side, it's going to be a loss. If we needed to add more to the credit side, then it was going to be a gain. So here we needed to add 70,000 more to the debit side to make our debits and credits equal. So that's how we find out that it's a loss on bond redemption. So we lost some money here redeeming these bonds. Now we can move on to question number 4. So question number 4 says, Nosker Inc. had the following transactions pertaining to investments in common stock. So back in chapters 13 and 14, you were dealing with issuing stock yourself as the company. Well, now you are investing in other companies' stock, right? So you are Nosker Inc. in this case. And on January 1st, you're purchasing 2,500 shares of Escalante Corporation common stock. So you're investing in Escalante Corporation. Then it says 5% for $152,000 cash. What does that 5% mean? Well, what that's showing us is the percentage of ownership that we have in that company. Because if we own a certain percentage, we have to change the way that we account for all of this. So we own 5% of Escalante Corporation. That's going to come in handy to know that once we start doing these journal entries. Then on December 1st, we were told that we sold 500 shares of that stock for $32,000 in cash. And we need to now journalize these transactions. So we can go piece by piece here. On January 1st, but before we even do that, we own 5% of Escalante Corporation, right? So we have this chart here. If we own 5%, we don't have significant influence. And so we need to value our investment using the cost method. So we're going to be using the cost method journal entries here in question number 4. So now on January 1st, we are investing in another company's stock. So we call that stock investments. Now, how are we investing in that stock? We're using cash, right? This common stock cost us $152,000 in cash. So we will debit our stock investments and we will credit our cash. To figure out the numbers for this, it's the amount of money that you spent to purchase all of these shares. This investment cost you $152,000. So we will debit stock investments and credit cash for $152,000. Now, on December 1st, you sold 500 shares of Escalante Corporation common stock for $32,000 in cash. So we got cash, right? So our cash has to be debited, has to increase here, because we just sold these shares and got money in return. And we're selling some stock investments. We're selling 500 of these shares that we purchased at the start of the year. So we have to credit our stock investments to show that that account decreases. Cash, that's $32,000. That's the amount of cash that we got when we sold this stock. Stock investments, it's not just going to be $32,000. For stock investments, we need to calculate that. So we go back to when we purchased all of these shares. We purchased 2,500 shares for $152,000. Well, we can divide those two numbers to figure out how much per share we spent. So 152,000 divided by 2,500 ends up giving you $60.80 per share. So we spent $60.80 per share back on January 1st. So now, here on December 1st, we sold 500 shares. So 500 times the amount that we bought these shares for, the $60.80. We multiply those two together, and we get a stock investments amount of $30,400. So your stock investments are valued at the cost that you paid for these shares originally. Right? So you paid $60.80 per share. You sold 500 shares here on December 1st. We take 500 times $60.80, and that's how we get our $30,400. So you'll notice your debits and credits don't equal. So you sold stock that was worth to you $30,400. But you were able to get someone to pay you $32,000. So you had a gain on the sale of stock of that difference, that $1,600. Right? Because you were able to get more cash than what your stock investments were worth to you. So now we can take a look at question number 5. So we need to prepare the journal entries for Knoller Company for the following transactions. Knoller Company acquires 25% of the common stock of Lauer Company for $150,000 on January 1st, 2019. So you see right off the bat, you now own a quarter of Lauer Company. That last problem, you only owned 5% of Escalante Corporation. So now you own a lot more of another company, right? So this is going to be using a different method here in this question than we did in question 4. So after we acquire 25% of the stock, then it says at the end of the year, Lauer Company reports a net income of $180,000 and declares and pays a $50,000 cash dividend. So we have a few journal entries that we need to report here. But before we do that, we take a look back at this chart. We own 25%. Well, 25% falls between 20 and 50. So significant influence usually exists, and the investment will be valued using the equity method. So it's just a different way of recording our stock investments. Right, so on January 1st, you acquired 25% of the common stock of Lauer Company for $150,000. So you have a stock investment and you used cash for $150,000. Right? So that doesn't look any different compared to when we bought shares of Escalante Corporation in the last problem. It's these next entries that are a little different now. So since you own between 20 and 50%, you now get some of the net income. You're going to be getting some of this cash dividend here now too, right? So on the 31st, we first want to journalize your portion of the net income. So we will debit our stock investments and we will credit the revenue from stock investments. So this is to record your part of the net income. Now, Lauer Company reported a net income of $180,000. That's the company as a whole. You don't get all 180,000. You only own 25% of the company. So you get 25% of the net income. So if we take 180,000 times 0.25, you'll end up with 45,000. Now, we also need to record this cash dividend that you get. So if we get a cash dividend, we'll be getting cash, right? So our cash has to go up. But all of a sudden now our stock investments are going down. What's happening there? Well, your stock investments act like a company's retained earnings, right? So net income makes retained earnings go up. So that's why we debited stock investments there in our second entry. But here, whenever a company pays out dividends, that makes a company's retained earnings go down. So your stock investments will be credited when you are recording this cash dividend. Now, Lauer Company is paying a $50,000 cash dividend. Again, you don't get all of it. You own 25% of the company, so you get 25% of the cash dividend. So 50,000 times 25% gives you 12,500 for your cash dividend amount. So that's the equity method. Now, question number 6, our last question here, deals with chapter 17. So chapter 17, you are finally reintroduced to the statement of cash flows, right? Way back in chapter 1, you were told it's one of the financial statements and you'll learn about it later. Well, you're finally learning about it here in chapter 17. So, it says Cushenberry Corporation had the following transactions. Determine how each transaction would affect the statement of cash flows. So we have 6 different transactions here, and we'll go piece by piece. But before we even do that, let's talk about the different parts of a statement of cash flows. So we have 3 different types of activities. We have operating activities, investing activities, and financing activities. So there's some common examples here for each type of activity. So operating activities will include changes in current assets. So that's stuff like accounts receivable, inventory, supplies. Changes in current liabilities. So that's your accounts payable. A gain or a loss on the sale of plant assets. And then any kind of non-cash expenses. So stuff like depreciation expense, right? If we depreciate our equipment, we're not actually spending any money, but it affected our net income. And our operating activities are all just adjustments to our net income. Now we can move on to investing activities. So investing activities are going to be proceeds from the sale of plant assets, right? So if you sold equipment for $10,000, the proceeds is how much money did you get from that sale? So that would go under investing activities. Anytime you purchase plant assets, that's a building, equipment, land, right? These are all investing activities. Anytime that you sell investments, that's going to be an investing activity. And then we move on to financing activities. So this is how a company can finance their business, right? We use that term early on talking about bonds, where a company uses bonds to that. We have flow. So we have three different types of activities. We have operating activities, investing activities, and financing activities. So there's some common examples here for each type of activity. So operating activities will include changes in current assets. So that's stuff like accounts receivable, inventory, supplies. Changes in current liabilities. So that's your accounts payable. A gain or a loss on the sale of plant assets. And then any kind of non-cash expenses. So stuff like depreciation. Expense, right? If we depreciate our equipment, we're not actually spending any money, but it affected our net income. And our operating activities are all just adjustments to our net income. Now we can move on to investing activities. So investing activities are going to be proceeds from the sale of plant assets, right? So if you sold equipment for $10,000, the proceeds is how much money did you get from that sale? So that would go under investing activities. Anytime you purchase plant assets, that's a building, equipment, land, right? These are all investing activities. Anytime that you sell investments, that's going to be an investing activity. And then we move on to financing activities. So this is how a company can finance their business, right? We use that term early on talking about bonds, where a company uses bonds to finance a project. Well, this is just ways for them to get money, right? So issuing common stock, issuing bonds, anytime that they pay dividends, or anytime bonds are redeemed, right? So these are just some examples. These are not the end all be all of statement of cash flows. But if we have these in place, we can figure out which section different transactions will affect. So let's start off with this first transaction. So you sold land that cost $12,000 for $15,000. So there's a few different pieces here to this transaction. We got $15,000, but the land that we sold was only worth 12. So that means that we also had a gain in the sale as well. So let's first take a look at the proceeds, right? We had $15,000 as our proceeds from the sale. Well, we were told that proceeds from the sale is an investing activity. Now, another important piece here when doing a statement of cash flows is figuring out, is this going to be added or subtracted on the statement? Well, it's all about what's happening to your cash. So if we sold land for $1,500, that means that we got $1,500. So we would add that $15,000 to our investing activities. And then we had this gain on the sale of $3,000, right? $15,000 minus $12,000. Well, a gain or loss on sale of plant assets, we see that over there under operating activities. So it goes under operating activities. But then we also see a negative. So what's happening there? Well, remember that your operating activities are adjustments to your net income. So your gain on the sale of equipment would have increased your net income, right? Because it's added on an income statement. But you didn't actually get $3,000 more dollars. And so we have to adjust our net income to show just the cash flows. So we have to subtract out that gain of $3,000. If we had a loss, that would have artificially decreased your net income. So we would have had to add in a loss. So there's some backwards thinking when going through a statement of cash flows. The way to get it down is just to practice it over and over again, right? Because anytime that you see a gain on a sale, you'll know I need to subtract that from the operating activity portion. Now issued common stock at par for $20,000. So we take a look over at all of our activities, and we see under financing activities, issuance of common stock. So This is a financing activity. Now, why is it a positive? Well, if we issue common stock and people give us money for it, that means that our cash is increasing, right? Our cash is increasing here by $20,000. So we would add that under our financing activities.
Trying to be more. I know I feel like there's still residual effects, but the reason I just kind of don't respond or text on my phone is because I don't know, I used to not have a good history of being a good texter or anything like that. And so I think just subconsciously I just really hate texting and I just avoid it. And I need to not try to avoid it as much because I need to be more productive and, more connected to people and stuff because I know that makes me feel like more mentally healthy, more productive, and so you need to be connected to people. I mean, if I'm trying to do anything that I'm trying to do with the coalescence and everything like that, I'm really gonna have to be in touch with people and everything like that. So even something as simple as texting and emails and stuff like that, I just need to be more responsive more quickly. So let's go ahead and let's give him a call back. I know. Yo, hey, ¿qué pasó, señorito? I was like right in the middle of trying to finish this video and doing stuff for class right now. Trying to like fucking focus and shit. Just chilling. Where you? Uh, yeah, dude, it was last night. I went over because I was just kind of working on stuff. I had the stuff due by midnight, and so I was like, "Fuck, let me just focus." And I was trying to just get outside, get some air. And there's three girls that came by, and I guess they started like drilling. They're hanging out by the tables and stuff. So I kind of kept on working stuff for a little bit, and I snapped that shit up, and then just went over to say what's up. And so yeah, now they live like right down here. So I know if we pop by or something like that, now they can like see us. I think they're like new tenants for that corner. Yeah, there's like two of them are like pretty cute, and then one of them like she was a little bigger, but she seemed like fun, like she was having a good time. So she seemed like good people. But I mean, dude, if you want, we can come out, dude. I know like it's been hotter, so I've been kind of seeing more people kind of trickle into like the pool and whatever. But right now, yeah. Like right now, just dude all by himself down there. So are you trying to go down there and get some dick? I don't know, dude. Like you never know. Like you can practice your lines on dudes sometimes too. Like the practice for women, like they're both human. Like they could be equally receptive to certain compliments. You never know. I don't know. So you could be like what the fuck the strippers and these OnlyFans chicks do? They just finesse it. They just milk it. You don't have to actually be into them. Like you just milk them for some money and shit. They'll start buying you some shit. Take it up the ass maybe once a week or something like that. But dude, you get paid. Hey, dude, like I said, man, like some guys they're lonely and they know what they want, but they got money. Hey man, they're getting what they want. You're getting what you want. Yeah, but it's a win-win. Yeah, it's that time of the month. And uh, I don't know what you're doing today, but like if you wanna come by or like do something a little bit later, you can. I just need to wrap up some stuff for class and try to get some stuff done, but should be able to do something. I still don't have my ID. I got a temporary ID and supposed to be getting my other ID in the mail, so I still can't like can't go in anywhere. I think I don't know if some place to take the ID because the temporary ID does have a picture on it. So I don't know if that'll work. I just feel it feels weird like walking with it. But, yeah, if it works, it works. You got lined up? Two guys in a truck? Yeah, dude. Oh, yeah, if you want to come by later, just hit me up. I should have everything wrapped up within a few hours or so. What time is it right now? 3? Oh, yeah, no, a couple hours, that'll be good. Sounds good, man. I'll keep on giving you a heads up. As soon as I see some shows down by the pool, I'll let you know. So I'll send out the beacon, the Tevin signal. Turn on the spotlight, and I see a big giant T in the air. All right, brother. I'll talk to you in a second, then. Madre wants texted her asking if she's having a good day. She's checking in. She says yes. How about you? Fantastic. Oh, started off shitty just because I was tired. I think that was my own damn fault. And then turning on the news, watching a bunch of bullshit. So, yeah. Oh, all right. Fantastic. And Dad just woke up from a nap. Oh no. I don't know what's going on with the downstairs too. Let's see. Actually, let me just get my call. All right. Hey, Dad. So I was just checking on you. I was going to text you, but then I thought about just want to give you a heads up on the apartments because still obviously noticing like a couple like little bugs here and there, but at the same time, what I thought was kind of cool that the maintenance guys did. What I noticed was it a few days ago, and I told Mom about it when she stopped by, but I noticed that they basically took sandbags and put them like on top of like the sewer grates and basically clogged them up, and then just went ahead and then opened up the water valves and then just flooded the bottom floor for about like an inch or two. And I was, because I remember walking down there, I was like, what the hell's going on? And I saw the sandbags and everything. I'm like, oh, it's kind of cool. And then the maintenance guys are kind of walking around and stuff. So I think that maybe they're like trying to like do a strategy to like just flood them out, like drown them out or something like that. And so like since then, I think it's like seemed like the help. I don't really like even notice them like as much on the bottom floor. Still notice like one or two of the big ones like downstairs, but yeah, and like no big ones coming up here, and just itty little bitty ones. I think that might, but like I thought it was kind of cool that it's like guys are trying to do something about it. It's like a decent strategy. I mean, it seems pretty effective, like from like what I can see, just because like I know in my sink, like I have my sink and I'll just fill it up with like maybe like up to like at least a couple inches of water, and then I'll notice like the next day I'll walk in and like there's like bugs that are just laying like in there like drown themselves, and so it's like I guess like you can drown them if they don't like die from other stuff, like just suffocate them. Heads up that it seemed like they were trying to solve it, but yeah, no, roaches just seem like the one type of bug that is almost borderline impossible to kill. They just keep on coming back. You try to smash them, you try to burn them or whatever. It made it seem like, nah, we're good. And kill one and 20 more come up. Sorry. Some about their evolution, they're doing something right, I guess, in nature. Like they're just proliferating and just spreading like no other. They know how to make babies. I just thought that was kind of cool. I just want to explain that to you instead of send you a big long text about it. Like, maybe, I don't know, might need to do like a couple like doses or a couple treatments of that. 'Cause, like I said, I saw like a couple like seem to come back, but definitely not as many as before. Like you seen like walk downstairs, it's like, oh, there's one. But it seemed like there's a little bit of progress there. I was just working on some accounting stuff. Figured I'd take a little break. Almost done with this video, and then I was thinking about maybe going by the pool, but maybe later. So I saw like one guy just hanging out by there, but I stepped outside on the patio. I was like, I just came right back inside. It says 107, partly cloudy. Partly cloudy. Oh yeah, what was it? I remember I was texting, Trina was texting me saying that. I mean, obviously you know in the car and the hood and everything. I even mentioned the text, but she was saying like, oh, my car was reading 117. I was like, yeah. So that's falling with it. It's like, where's the thermometer in the car? It's like right there in the boot or something. So yeah, you got the heat from the vehicle, road, and all that. Well, what's Zan up to? Let's see. That's why I think it's so good when you only get confidence. It's always decent. Pick myself up. I know, like I didn't sleep like a lot last night. Like no rhyme or reason to that. But what, 4 and then woke up around like I think it was right after mom came by here like real quick and sleep, I guess. Taking it easy, but I feel like I got some energy, got some lunch in me and kind of relaxed a little bit. Didn't fall asleep, it was kind of like meditate. Feel like I got more. Yeah. So I have a little meeting with that's so good. Let's see. You guys have your it's like this nice pasta sauce. Sauce with that's good. So with all the rest of the chicken, I had a great chicken sauce. So we have one for there are some thoughts. Same thing. I got yeah, we need eating good, doing good, everything's good. Yeah. I was thinking like Jim Carrey or something like that. I think his is different. Like Evan Almighty or like the Bruce Almighty is like speed or something like this is different. But what was it? His name was Joey from Friends. What's it was? Yeah, something like, was it gravy? Good. Oh, because he's like just shoving everything in his face or putting everything in one plate or something. It's like, what are you doing? It's like everything good. Like combine it all. It's like it's all good. It's all going in the same place anyway. All good for the heart, for the soul. I mean, good for the spirit and the soul. Yeah, I just wanted to check in on you guys and fill you in on that little update. That was pretty much it. So, it's gonna probably try to get back to finish this video and more assignments now. So let's do it. Once your body trying to fight it off, so it's kind of annoying, but still doing 3 hours, hopefully. And let's do whatever you got to do. Eat what you need. Sleep. Get enough rest. Yes, I figure she was busy, busy, busy. So I'll figure I'll call hear from her in a little bit. Hey, you hear like what Gary Zan or Clemson, you know, if he's not working. All right. Well, just wanna say hi for a little bit. Trying to get back to work. Oh, also the other things like finally, so should be caught up on assignments. I got one interpersonal communication thing to do. So finally, like this staying ahead at least a day or two. It's pretty here. Yeah. So I can plan on instead of like one assignment a week or so, it's like 3 assignments or 4. With interpersonal communications, it's pretty much at least every day or every other day. It's like something going on there. So I'm like, 'cause I can't afford to miss any of those. Once for help. It's a good test to see how I can handle it. Seem to be doing all right as long as I just stay focused. Don't really have a whole lot of time for other stuff, but I mean, like it's at least getting this done moving forward. So it's what I need to do. Yeah, probably. Yeah, true. All right. Oh, I'm gonna get back to it, but hopefully feel a little bit better. Um, oh, I also noticed on Disney. I don't know if you'd be interested in watching it because I feel like you've seen the other ones with me, but the newest Avatar movie, the Fire and Ash one, I never actually saw that in the movies. You guys watch that? It's 3 hours, but so I'll probably have to break it up or something. Or consider it. Yeah. Because the original one was like mind blowing. That was one where it was like they using all this new technology, like really cool graphics. It was a really long story, but also like it was like action packed and it was a cool concept. Like that one was really cool. And then the second one was kind of just like a repeat of the first one. So it was kind of like I feel like a lot of people were kind of disappointed where it was just kind of regurgitating what happened in the first one. But this third one, they're saying like apparently it's supposed to be different, like a lot different. So like James Cameron, I guess, learned from or whoever, like writers, whatever, learned from that second one. It's like, yeah, we can't just like remix what we already had and like, just create. They created like a whole new story, but like also it's connected though, where it's like a trilogy, and then it's supposed to like close it off. So it's much better reviews from the third one. That's like sort of change. Sopranos, you have that. Oh, and then also I saw because I was checking on Apple. I started just watching Silo because I didn't want to watch. I didn't want to get ahead on the was it Cape Fear show, and then it might have been another one, but that one I saw there's new episodes of that that'll be over or what. But I just want to watch that too. I was saving that for you guys since I knew I was watching that with you guys, so I didn't get ahead on that one. 'Cause I also have HBO Max, so there's like what Game of or the House of the Dragon and stuff on there. It's like stuff that I know that you and mom are probably really interested in. But I know, well, Sunday, I think Sunday might be good because like that way I can block off all of Sunday, try to get as much done here as I can before then on this, and then even try to get ahead too. So by Sunday I can block that off, and then because I know in the morning I'm supposed to go to the class with mom at church. She asked me to do that with her, and I told her I'd be willing to go. It's kind of curiosity and figure out maybe see if I can learn something or see who's there. And then after that, I think I don't know if you guys want to grab breakfast or I don't know what time of the week we ever have this, or if there's this extra service or something after that. It's what exactly what the deal is, but I know I'm going to the church with her in the morning, and then after that, I can probably come by and do something. All right, sounds good. Yeah, just curious, just thinking about you guys. Hopefully, yeah, just do what you got to do. I'll do what I got to do on my end, and see you guys on Sunday. Have a good one. Bye. Mom sent me a heart. Aw. Love you. Energy. Give me the power. It's a wee little bit. Just enough to charge my phone right now.
Now, recorded depreciation on buildings for
Oh,
17,000.
connecting people.
So depreciation on buildings. Well, we aren't buying or selling the building. So it doesn't fall under investing activities. It's not common stock or bonds or dividends, so it's not a financing activity. We take a look up at operating and you see those non-cash expenses. Right? So depreciation expense is a non-cash expense. And so it goes here under operating activities. And we're back to the weirdness that is adding and subtracting under operating activities, right? So non-cash expenses all have to be added in from the same idea, the same perspective as why we add in losses and we subtract out gains on sales, right? Depreciation would decrease your net income, but you never actually took $17,000 out of your pocket and handed it to someone. So your cash flow didn't actually get affected. So we have to add back in that 17,000 to reconcile our net income to our cash flows. Now, paid salaries of $9,000. This one's a little tricky. So this is not listed on the statement of cash flows. And why is that? Because your salaries and wages expense would have already affected your net income, which is at the top of the operating activity section. So you don't have to then make any sort of adjustments to your net income there. So your salaries and wages expense will not show up as an individual line item on your statement of cash flows. It would have just affected your net income originally. Now you issued 1,000 shares of $1 par value common stock for equipment worth $8,000. So we are getting equipment by issuing some common stock. So we can be thinking, okay, financing activities, investing activities, right? Plant assets fall under investing, common stock falls under financing. Well, we need to first remember the name of this financial statement, right? The statement of cash flows. At no point in this transaction did any cash flow anywhere, right? We purchased equipment with stock. So it's not listed on your statement of cash flows because cash is never involved in this transaction. So the first question that you have to ask yourself when evaluating these transactions are, is cash involved? Right? Here, the only two pieces that are involved are shares of stock and equipment. And that's it. Now the last one here, you sold equipment which cost $10,000, had accumulated depreciation of $7,000, and you sold it for $1,200. So we have another multi-piece problem here again, right? The proceeds from the sale are $1,200. Well, the proceeds of the sale, that goes under investing.
Oh, got it.
Right? And if we are selling equipment, we are getting cash, so we add it under our investing activities. But then we have this loss on the sale as well. We find this number by taking your cost, your $10,000, subtracting out your accumulated depreciation to find your book value. So our book value is $3,000. We compare our book value to the proceeds from the sale. So 3,000 minus 1,200 is at 1,800, right? And we sold it for less than what it was worth on our books. So that's how we know it's a loss. So now we try and figure out, okay, where does a loss on the sale of equipment go? Well, loss on the sale of a plant asset, which equipment is a plant asset, that's in operating activities. So we put it under operating activities. And you'll notice we add it back in because we have to add that loss back into our net income. So that way we are just looking at our cash flows for the operating activities.
Here we go.
Are we really insuring?
Sucked in. You want to watch more. Watch more of our ads. None of your ads are helpful, YouTube. Not a single one of them applies to me. I felt like nowadays, like technology was supposed to be more sophisticated, where like the YouTube algorithm or whatever, the Instagram algorithm is supposed to actually be able to cater to you. I'm like, dude, like none of this stuff applies to me. Like you guys are giving me the wrong ads. Say jobs. Lucky Martin, what are you guys doing? What you guys up to? You want some ideas? I got plenty. But y'all don't even know who I am, so y'all don't even know what you don't know. All right, what was next on the agenda? Just want to make sure I complete all my objectives here. I got started on chapter 20 Smart Book. Read a little bit more scripture. We can do that. And move over to our interpersonal communication assignment, exploring culture and perception. All right, we're going to read the prophets and wisdom literature. All right. All right, we're on page 23 of the New American Bible, Revised Edition. Up at the top, or well, sort of like maybe 30% of the way, 25 to 30% of the way down, the prophets. Given the complicated history of the writing and editing of the Pentateuch, it should be no surprise that the books of the prophets did not have a simple development. Some of the books of the prophets were written by disciples of the prophets, for example, Amos and Hosea. Others seem to have been produced by the prophet himself or his secretary, for example, Jeremiah and Ezekiel. Some books of the prophets are actually amalgamations of the prophecies of different prophets from different eras, for example, Isaiah and Zechariah. One of the books of the prophets, Daniel, is probably not even a prophecy in its classical definition, for it is more of a series of parables and apocalyptic visions which supposedly occurred during the Babylonian exile, but which were actually written during the Maccabean rebellion in 165 BC. The prophets use various techniques to proclaim their messages. There are visions, oracle statements, as if the sayings came from the mouth of God, poems, parables, prophetic actions. Frequently, while the prophets were addressing their own times, the Holy Spirit gave another, more profound meaning to their words and actions that foretold later events, especially the coming of the Messiah. While one could speak of prophets in the days of Saul and David, for example, Nathan, and the next century, Elijah and Elisha, the classical age of prophets began around 750 BC and ran to around 445 BC. The era of Ezra and Nehemiah, and the closing of the age of prophecy. For wisdom literature, a third form of Old Testament literature is wisdom literature. Originally, this was a collection of folk sayings put together to instruct princes on how to govern their people. In later Old Testament times, the concept changed. Around 300 BC, Judaism began to be influenced by Greek philosophical ideas, which emphasized the transcendence of God. If God was the uncreated creator who had nothing to do with the material world, then there had to be some intermediary to communicate God's will to us and our needs to God. Jewish people began to speak of God's attributes as this type of intermediary. For example, God's holiness, spirit, etc. The most frequently used attribute was God's wisdom. It was portrayed as a woman, modeled after the Egyptian goddess Maat, which sought to instruct the ignorant and lead them in God's ways. The last Old Testament book to be written was probably the Book of Wisdom, written as late as 50 BC. We'll pick up on the Psalms on page 24. Personal communications assignment. Smart book. I'll cut it off, and I just don't want the videos to run like too long. Hour and a half, 2 hours, fine. 3 hours seems a little excessive. Nobody's gonna watch that. Or at least, like, if anybody's watching it, then any individual point's gonna be kind of like too muddled, or it's gonna be like too mixed up in a bunch of other stuff, and it's gonna be hard to find. So the next one, let's go ahead and review what we have so far. Go ahead and use those. All right, so this is what we have so far. Let's put it open. So we got answers 1 and 2 complete for communication, COM 110 assignment, explore culture and perception. Nope. Excuse me. The objective is to consider how your culture or cultures, for example, nationality, heritage, affect your perceptions of others and their communication with you. Speak with members of your family or community to get their perspectives on how your shared culture impacts your perceptions. After these conversations, answer the following questions. 1, how does your culture or cultures shape your expectations for interacting with others? For example, family, authority, or strangers. Include a family or community comment and a reading concept. So for part A, there are several cultures that influence my life. Although some vary in degree when measuring which ones have impacted my life the most, there are many that stand out among the others, and others still that have managed to play a minor yet notable role as well. The top 3 cultures that I believe have influenced my life, my perspective, and molded me into who I am have to be: 1, the influences of Latin or Hispanic culture gained from my mother and her side of the family. 2, the rural, Midwestern, or heartland or basket culture or breadbasket culture gained from my father and his family. And finally, 3, this last one I was using Gemini, so I'm not exactly sure, but from what I was reading, this seems like the most accurate from what I was able to find. Not Antifa, because they seem like apparently they're bad. They're doing a bunch of shady shit. So not them. But I've never heard of this, so forgive me if I'm like I don't get this one right, but apparently it's called ACAB or ACAB or abolitionist culture. So the ACAB or abolitionist culture, I don't know if that's the most accurate term, but anyway, gained from all the negativity associated with law enforcement and significant flaws identified over time within the legal justice system, including contemporary political structures. My mother and father's cultures are very different, yet they both taught me how to be accepting of others, how to love unconditionally, and how to be disciplined. On the other hand, my experience with authority has been relatively poor, since my experience has taught me that most people in positions of authority tend to abuse their power, lie to people, and take advantage of them, using their power to gain at the expense of others. Part B. One comment that was said directly to me that I've never forgotten is when an officer flashed his badge in my face and said, "Do you know what this means? That I can do whatever I want to you and that you can do nothing about it." Yeah, that was an actual thing. I remember that specifically. I'm never gonna fucking forget that shit. This was a perfect reminder for me that no one with a badge is to be trusted under any circumstances. To provide a more positive example from my mother's side, I was raised to always make sure everyone who was invited to a gathering had enough to eat. Because of this, anytime I ever have anyone over to my house, I have a habit of cooking or grilling way too much. But this way, I always ensure my friends' bellies are full and their hearts are satisfied. Part C. On top of all these, there are numerous microcultures that have contributed to shaping me into who I am today. For example, I'm a huge fan of the University of Kansas, or KU, Jayhawks culture, Rock Chalk. I was inspired by my father's passion for the team. It rubbed off on me while I was being raised by him, and it has stuck with me ever since. Part 2, or question 2. How does your culture or cultures influence your interpretation of a specific situation, for example, conflict or celebration? Provide an example, a comment, and a concept. For part A, the cultures I've been exposed to in my life or have been exposed to have influenced my ability to resolve conflicts as well as partake in celebratory activities. For example, regarding conflict resolution, my mother and her family have a way of being extra nurturing and caring for others. I try to make sure everyone's needs are met, even if I disagree with them. I also always try to make sure everyone feels heard and that everyone who wants to have a say in a given situation is understood and given a chance to contribute. Equity, being equitable. Part B, one thing my uncle Tony on my mother's side once told me, I think it was him, I might not be attributing that correctly. Either way. Yeah, I just want to specify for the record that I'm not totally sure if it was him, but I think that's somebody on my dad's side. It could have been my Uncle Kenny. Anyway, somebody told me if your belly is not hanging over your belt, you're too skinny. And this is yet another memory that has stuck with me for years, inspiring me to always make sure everyone who shows up to an event is sufficiently nourished and satisfied. Part C, another considerable factor that has shaped my behavior is co-cultures. One notable example is the Catholic Church, inspired by my mother's faith and dedication to religious traditions. The second example has to be the holidays celebrated by various cultures, even though they are likely celebrated here more than in other countries, such as Cinco de Mayo, St. Patrick's Day, and Chinese Lunar New Year. Each of these days, I can't resist going out and joining in the local festivities. Party, baby! Okay, I gotta party it up. Any reason to party, I love it. We're getting people together, celebrating, uniting on a single front to celebrate whatever it is we want to party about and celebrate. We're doing it together. All right. 3, how does your culture or cultures affect your communication style? For example, directness or nonverbal cues. Give an example, comment, and connect it to a concept. All right. So we did 1 and 2. Gonna go ahead, wrap up the video here for now, and then we'll pick it right back up. So just want to go ahead and just separate the content a little bit.